Hey, my friend, let's just stop and think for a second, shall we? Governments and big financial institutions are constantly telling us they're working for our benefit. You see people in suits on TV using magical words like stability, growth, and equal opportunity. They're always promising us a bright future. It all sounds so reassuring, doesn't it? But what if, just for a moment, we step away from those bright stage lights and into the dimmer, dustier corridors of history? You'll find a much different, much darker story there. It's a story about how governments have actually been using clever, financial tricks for centuries to keep ordinary people one step behind. Their goal has always been the same: to consolidate power and wealth in their own hands while ensuring the rest of us remain dependent on them. And you know what the most shocking part is? These tricks aren't new at all. The same game has been playing out for centuries. Only the costumes, the stage, and the names of the actors change. But the essence of the game, the mechanism of transferring wealth from the bottom to the top, always stays the same. So, let's start with the oldest and most basic move in this game: inflation. Imagine you're an emperor. You have an army, palaces, and massive expenses. But the money in your treasury, the taxes you collect, isn't enough. You have two options. You could go to your people and be honest, saying, "Folks, we can't manage the budget. We have to raise taxes." But if you do that, you might find an angry mob at your palace gates the next day. That's politically very risky. Or you could take a second, more clever path. You quietly, without anyone noticing, devalue the currency. The emperors in ancient Rome wrote the book on this, especially in the 3rd century, when they were squeezed for cash because of endless wars. They started gradually reducing the amount of silver in the denarius, their currency at the time. A coin that was once almost pure silver eventually became a worthless piece of metal with maybe 5%, or even just 1% silver, the rest being cheap metals like copper. The empire acted as if nothing had changed. But everyone holding that money, the people paid a heavy price for this game. Suddenly, prices exploded. The money you used to buy a sack of wheat yesterday could barely get you half a sack today. All the savings you worked hard for over the years evaporated right before your eyes. Even if wages went up, your purchasing power kept dropping because prices were skyrocketing. This was history's oldest and most brutal silent tax, and this trick is still used today. The only difference is, instead of imperial mints, we now have central banks run by people in suits. The technology has changed, but the logic is identical. When we get to the Middle Ages, the game got a bit cruder: forced loans. Kings would knock on the doors of wealthy merchants or guilds and say, "Your country needs you. It's time to show your patriotism," and ask them for a loan. Of course, this wasn't a request, it was practically an order. You knew what would happen if you refused. Your assets could be confiscated, you could be thrown in jail, or worse. The king would sometimes promise to pay it back with interest, but that payment either never came or arrived years later in devalued currency. In short, the king financed his palaces and wars while the most productive people in the country had their capital forcibly taken. It was a robbery disguised in the mask of patriotism. Then, in the 17th century, they made the system even more professional. Let's consider the founding of the Bank of England in 1694. This bank wasn't created to serve the public. The real reason was that England urgently needed money for its endless wars with France. The system worked like this. Wealthy investors bought government bonds, essentially lending money to the state. In return, the state guaranteed it would pay them regular interest. And where did the state get the money to pay this interest? You guessed it, from the people. Through taxes on the most basic consumer goods like beer, salt, and cloth. So just think about it. The wealthy got to grow their fortunes risk-free. By lending their money to the safest borrower, the government. The poor, meanwhile, were funding the interest payments for the rich through the taxes they paid on their daily necessities. This was a brilliant wealth transfer mechanism, legalized under the name of national finance. And this setup laid the foundation for the modern financial system we have today. Now, let's fast forward to our time. The tricks are now much more complex and not so obvious. Take budget deficits and national debt. Politicians are constantly telling us they're borrowing for sacred causes like infrastructure, education, and healthcare. They tell us this debt is for the people. But a significant chunk of that massive debt usually flows to large defense contractors, giant corporations supported by tax breaks, or big banks that need to be bailed out. And what happens when it's time to pay the debt back? Governments never cut spending at the top. Instead, they raise taxes, create inflation to devalue the currency, or slash social benefits. In other words, others enjoy the benefits of the debt, while we are always the ones left to pay the bill or remember the bank bailouts. Recall the 2008 crisis. Big banks took insane risks, bundled up worthless mortgage loans, and sold them, nearly crashing the entire global economy. And who saved them? We did. The ordinary taxpayers. They were kept afloat with massive bailout packages funded by our taxes. And what happened next? They emerged from the crisis bigger and more powerful than ever. The rule was simple: privatize the profits, socialize the losses. And we were told this was necessary to save the system. Even our pension systems are basically a grand sleight of hand. For years, money is deducted from our salaries to be put into the system. We live with the assurance that this money will be returned to us when we're old. But in reality, there's no money being saved up. Governments spend that money the moment they collect it, and in its place, they leave an IOU, a note that says I owe you. The system is based on the assumption that future working generations will pay the pensions of today's retirees with their taxes. This is a generational Ponzi scheme that works as long as the population is young and growing. But when the population starts to age and the number of retirees increases while the number of workers decreases, the system comes to the brink of collapse. That's when the government has to reform it. And this reform usually means raising the retirement age, cutting benefits, or eroding pensions through inflation. Do you see the pattern? At every stage, the trick relies on perception management. They call inflation growth. They call forced loans a patriotic duty. They call government debt an investment. They call bank bailouts stability. And they call pension cuts reform. The language they use is designed to mask the reality that wealth is constantly being transferred from the many to the few. The reason this game has worked for centuries is simple. Most of us don't study economic history. We don't fully understand how financial systems work. And by the time we realize we're in a trap, it's usually too late. In recent years, these tricks have become even more sophisticated. Have you heard the term quantitative easing, QE? Before the 2008 crisis, almost no one knew what it was. Central banks literally created trillions of dollars out of thin air to calm the markets. They used this new money to buy government bonds and mortgage-backed assets. What did this achieve? It saved the financial system. Yes, but how? It sent the prices of assets like stocks and real estate into the stratosphere. And who owns most of these assets? The already wealthy. For an ordinary household, the result of this was a rising cost of living and imbalances in the financial markets. So, the money printing trick saved those at the top while creating inflation and inequality for the rest of us. One of the government's favorite things to do is to weaponize complexity. Tax codes that are thousands of pages long. Financial instruments that even professionals struggle to explain. Budget documents filled with jargon and acronyms. All of this creates a fog so thick that it becomes impossible for an ordinary citizen to track where the money is going. Complexity becomes camouflage. When you can't see the wealth transfer, you can't resist it. In ancient Rome, you could feel the trick in the lightness of the debased coin in your hand. Today, the trick is hidden in the footnotes of a balance sheet that no one reads. So why am I telling you all this? Because this game is happening right now as we speak. And it's accelerating. Inflation is eating away at our savings. Debts are growing larger every day. Whenever the markets stumble, bailouts are still the go-to solution. The biggest lesson from history is this: these tricks don't just exist. They always come back. The people of Rome suffered. The merchants of the Middle Ages lost their fortunes. And today, we are the ones paying the price for the debt and inflation policies of modern states. And here's the harsh truth. Most people will never escape this game because they aren't even aware they're playing in one. They think of inflation as a natural phenomenon, taxes as inevitable, and bailouts as an act of mercy. This ignorance is the system's most powerful weapon. That's why financial literacy is a form of resistance. Economic history is a weapon. If you know these tricks, you are much harder to manipulate. So, What should we do? Always look behind the headlines. A stimulus package is announced. Ask yourself, whose pocket will this money go into first? Focus on building real wealth. Acquire assets that can hold their value even when currency is being devalued. And most importantly, never assume the system is working for you just because it says it is. Systems exist to protect themselves, not you. The financial tricks that left Roman citizens broke are the same ones draining your bank account today. They're just dressed up in modern language and used more complex tools. The only difference is whether or not we recognize the game in time. If this conversation opened up a new window for you and made you look at things differently, hit subscribe. History has all the answers, and I'll keep showing you where to look.